What is going on, guys? Thanks for joining my channel, Robinhood. This is Bob. Today's video, guys, I'm going to go over how much $50,000 of selling puts of AMC pays me in premium. So let's get started. Before we start, guys, I just want to let you guys know I'm not recommending people to do this strategy that I'm doing. I have a pretty high risk tolerance. Most of the money I'm using in Robinhood is profits from last year. So I'm just trying this strategy out this year to see what kind of outcome and what kind of win percentage I'm getting out of it. So this year I am doing selling puts on high volatile stocks, and that pays higher premium. So the first week I did do Virgin Galactic. It did actually tank pretty bad, but I was able still to squeak out about $350 of premium out of that. And this week I am doing AMC. I did sell puts on AMC this week, and I did one put on Fubu. So as you can see here, I have a $18 strike price selling a put. The reason I picked $18, even though it is a very risky strategy, I do still crunch some numbers and try to see what my statistics of getting that particular stock. So as you can see, AMC is at $20.39. On Friday, it was as low as $16.95. I usually try to look out at the 3-month to see which direction it's going and what the lows were at. So it's hit basically its lows within the 3 months, and it is on a downward trend. So that's why this stock is very volatile. The stock itself is just the meme stock, but also you get a lot of premium with this. So I feel that even if AMC continues to go down, I don't see it going under 18. Next week I actually do see this stock going up. So I picked the $18 strike price, as you can see here. If you're not familiar with selling puts, all it means is that you're offering to buy the stock at a certain price, which I picked 18, and I have to put up collateral times 100. So each contract I'm putting up $1,800, and I do have 28 contracts open. So they are going to pay me an average credit of $48 per contract, and that gives me a break-even price at $17.52. So anything $7.52, higher than $7.52, if the stock finishes at, I'm in the profit. So if you look here, I'm already up $196. So collateral wise, it is giving me $1,800 with 28 contracts. If you times that together, you get $50,400. So that's how much this one position I have open with AMC is, and it does expire on Friday. So if you look at the credit, it's at $48 that I get premium per contract. So if you times 28 by $48, guys, just with this option here, I'm making $13.44 if it does expire worthless. So if you do look at the options, like I said, I don't just try to pick a close strike price. I usually like to keep the percentage in between 70 to 90%, really depending on how the stock is trading. So AMC has been on a downward trend. Volatility has been going up. So if you look here, guys, the option that I have here right now, where it's sitting at, I did buy this at I did get a better premium. It's at 41 now, so I am up on this right now. But right now it's saying it's at 79% win percentage. I believe when I did this, it was about 74. The 19, I believe, was in the high 60s. So I could have been a little greedy and went with a $19 strike price or even a $20 strike price. But like I said, this isn't really a stock I want to own. But if I do get it at this, if I am assigned it at this particular price here, I would take it. And I actually would turn around and sell covered calls on it. Because let's say if it's at $20.39 and I already had the stocks, I would either pick a $20 strike price or a $21 strike price. As you can see, the premiums are pretty nice with 28 contracts. So I would definitely probably do the wheel system on this one. But like I said, I would be a little more greedy at picking a closer strike price with AMC. If you do see my other one that I have, it is Fubu TV. I did do that for my second one. I just had a little bit of leftover money left. So it was $1,250 I had to put on here. They paid me a premium of $41. So far it is up $6 here. Break even price is at 12.09, but come Friday, no matter what happens, or maybe earlier if I need to free up any money, I will be buying this out to do new positions for next week. So that's what the video is about. AMC is paying me $13.44, and that's being, in my eyes, pretty conservative. I could have got paid $200 to $2,500 if I was being a little bit more greedy. If I did $19 or $20 strike price, but like I said, 70 to 90% is usually where I want to be at for the most part. I usually don't post videos before I buy the stocks or sell the covered calls because I don't really want people to try to follow what I do. I do have, like I said, a high tolerance for risk, and all the money I'm really using is profits that I made last year. So like I said, this is just a newer strategy that I'm doing to see if I can make more money than I did last year when I sold cover calls. So if you guys want me to show you, or at least do a video on at least the top couple stocks that I'm going to be doing, I definitely will. But like I said, I am not encouraging anyone to follow my footsteps. I'm not encouraging anyone to do, what I'm doing on it. Like I said, it is very risky. Even though the Virgin Galactic did work out last week as a profit, I could have been down a significant amount of money as well. So that's all for today, guys. Please just let me know what you think. Let me know if there's any other stocks that you guys want to see, or possibly I'll be interested in selling covered calls. But like I said, it would have to be a very volatile stock and a high premium stock. So definitely hit the like, comment below, and don't forget to subscribe. Thank you.